Hi everyone, welcome back to Be Rich. Since our last video to now, we have seen some tremendous movement in gold prices. Yes, we have been talking about gold going up and up and up, and it looked like somewhere along the line we have to finally run out of some steam. Now the question begs, is this a correction or is this just profit booking? And this has been plaguing our minds for the last 24 hours. And I want you to just keep everything in perspective because I'll ask the team to throw up on screen the gold prices since Trump's election. Before Trump's election, we were looking at gold prices well below $2,800 an ounce. Now we went all the way up, crossing 4,400 almost and coming sliding down to 4,087. So keep this in perspective, right? Because a lot of you are immediately chasing me on Instagram saying, should you take hockey stick to gold? Are you crazy is what I wanted to say. So fearing this, I thought it's good to get Anand to come and talk about this and to give you a perspective of what gold really is. And this is quite normal, what we're seeing in the market. And, gold goes through these periods and not to get carried away as an investor, especially that to a value investor. Yes, Anand. We saw gold correct. So,
See, it is a very violent correction. It's a 6% correction and then it settled at 5.5. So, first thing you have to understand, you have to start measuring gold from the day Biden seized Russian money, which was at around 2000 to 1800. And from there, gold has shot up to 4400. And lot of underlying factors supported it. The Ukraine-Russian war, Trump's attack on the Federal Reserve's easing of policy, Trump's tariff tantrums, China's attempt to leasing gold to become store custodian of gold and all that. So China's maneuvers, the American response, problems with the Fed, and overall loosening of American monetary policy
policy.
right now. There are several things that could have happened. First thing, the possibility we will know within next 1 week is gold got overbought in India. And it was also tied up with silver and gold bought up overbought in India.
Yeah, because silver is also
And there
correct.
was a squeeze. The mighty Tatas ran out of stock. And their chief, Ajay Chawla, said Tanishq would run out of stock on Diwali. So if Tanishq is running out of stock on Diwali, it means there was a buying frenzy in India.
Yes.
And we know for sure there was a silver buying frenzy in India. That was known. So it could be that. Second, credit markets have choked up everywhere.
Very true.
There have been some bankruptcies in private credit, and Jamie Dimon has used the word cockroaches. And he said, so we have to see for cockroaches everywhere. So there is a feeling that private credit is starting to deteriorate, and we have to see whether it will spill into the public markets.
True.
So if this happens and there is a credit tightening in the system, that means whatever quantitative tightening that Jerome Powell is doing,
Yes.
whether he will stop quantitative tightening. He's been tightening for 2-3 years now.
Yes.
So that is basically whatever is paid off, he's letting it go and he's not buying it back.
Yes.
So will he stop quantitative tightening is another question. And how bad is the private credit market in America?
True.
In between, Oracle issued a bond for $18 billion to invest in AI.
Yes.
So why are people borrowing to invest in AI is another question. So whether it is a credit problem in America, whether it is a symptom of the credit problem in America. 2, 3, there have been a lot of calls, margin calls in the market. So people, what they normally do is they sell assets that are profitable to repay margin on other calls. Gold has gone up 65% this year and is the most profitable asset class. So people could have just taken profits out of it. Not just profit taking, they could have taken the money and paid off margins in other places,
Yeah, wherever the pain is.
wherever the pain is. So we do not know where the pain is. So it could have been any of these three reasons. Or it could be finally, like you said, a plain profit taking, where the price of an asset went up 65% and it got stretched into a bull market, become overstretched. And some people have got who wanted to take out the profits.
Okay.
And once they started taking profits, the weak hands, the weak hands meaning people who have borrowed money to buy gold and silver, when the market fell by 1 or 2%, they would not be able to bring margin, so it would have fed off into a sell-off.
Correct.
So whether the weak hands got flushed out, all those details will be available in later
What you're
stages.
saying is absolutely remarkably true, because I had conducted a poll within our group, and it's not a massive poll. I mean, just around 1,000 participants were there, out of which 20% have replied saying they're worried about their position in gold. Meaning, what you're saying is very true. They seem to have unnecessarily taken leverage and walked into gold, looking and having FOMO. So, someone who's in that situation, what would you say they should do? Because much against our advice, let's say they've gone ahead and borrowed whatever way they wanted to, and they've taken credit to get gold, and now they're seeing a drop by 5-6%.
It is better to liquidate gold and keep only your position.
Okay.
What is your position fully funded without interest obligation or repayment obligation from outside? Only that portion keep it open. If you are in silver, you are in serious trouble
Yes.
because you cannot get out today as the market is going down because the ETF markets are closed.
Yes.
Only tomorrow, when the ETF market opens, you will know how many people are naked in the water
Water.
because
The tide's running
when the
fast
tide
out.
is running out and who is without their swimming trunk, you will know tomorrow when the margin calls on the gold and silver ETF become due.
Correct.
So if you are already margin is there, better to get out now. If you can repay the money in gold, you repay the money in silver, don't. Because silver you can expect further correction. I won't be surprised if there is a correction in gold also.
Correct.
Because in the last 1 month there has been a very big run up.
Yes. Massive.
So gold can correct further to stabilize.
Correct. Another question a lot of people have been asking, which I want clarification, is, let's say they've been sitting on the sidelines, missing this whole gold run, and now they see this correction. Their big thing is they think this is maybe an opportunity, this is a dip that they should be diving
No,
into,
no, no.
because a lot of people are quacking this on
If you
media.
are going to, if you already do not have gold, then you start buying small quantities of gold. If you have more than 10 or 15% of your total assets in gold, you are okay. There's no need to add.
Correct. So that gives you a broad perspective of where Anand stands in this. So if you don't have any gold and you need gold in your portfolio, this is for the long term, for life, then definitely take these opportunities.
To buy in very small quantities.
Yes. To buy, as he says, Tiffin coffee range, you can look at accumulating gold slowly. There's no rush. You don't need to go empty out your pockets and buy gold in large quantities. Keep slowly accumulating how you've always been accumulating gold, little by little, to reach your target. If you've already achieved your target, like he said, 15-20% of your target, you've reached that target, your portfolio is that much weightage is in gold, then you can just avoid all this and move on to looking at good companies, value stocks, that value prices, those are still there. With all this oxygen being taken by gold and silver, a lot of you are missing out the main signal which is there in the market, that there's a lot of companies which are great value buys right now, and keep nibbling away those stocks, be it in the US, be it in Japan, or be it here at home in India. Keep doing that, and you should be well and good on your way to creating wealth. And don't get carried away with all this price swings and market news and carrying hockey stick and all these things. Don't have to do any of that. Anyway, thanks for watching, Be Rich. I hope that got you some clarity as far as gold and silver is concerned, and what you should especially do if you have kind of leveraged yourself into a position or you painted yourself into a corner, and also giving you an advice on how to get yourself out. It's all right. We all make mistakes, but it's better to own up to the mistake early and find an exit. Though if the losses are minimal now, it's better than maximizing your losses and having bigger problems later on. Thanks for watching Be Rich today. See you again tomorrow with another one. Thank you.